Chairman and CEO James Quincey joins us here in an exclusive interview to talk through the quarter and the road ahead. James, welcome. It's good to have you. How would you describe demand right now, given the softer volume trends, but overall pretty good numbers?
Yeah, look, I think global demand is pretty resilient. I think the last person on was talking about resiliency. I think the global economy is still posting pretty good numbers. There was a small upgrade from the IMF yesterday. Consumers seem to be pretty resilient around the world. Yes, there are puts and takes, some countries doing better than others, and some sections of consumers doing better than others, but overall pretty good resilience. Our third quarter was a little unusual in the sense that actually the developed economies did a lot better than a few emerging markets. We see that as largely temporary. A couple of them are ongoing, but largely temporary. And so we see pretty strong resilience out there, and we're confident of reestablishing our overall growth equation, which is growth with a balance of volume and pricing.
So let's talk about the volume, because the unit case volume of down 1% was lower than consensus. Should investors be concerned about that? What happens next?
Look, when you disaggregate the volume, what's interesting and relatively atypical is that developed economies, US, Europe, Japan, Australia, in aggregate, they grew volume and they grew way ahead of the emerging markets, which is not the normal pattern. Normally, the emerging markets grow faster. And then those emerging markets, there was a couple of factors there. There's been some ongoing slownesses as we've chosen bits of the portfolio to focus on in China. So the overall number is down, but actually Coke is up in China as we work against the economic backdrop there and we invest for the long term. And then the Eurasia, Middle East, there's a spillover from the Middle East conflict, but also a number of quite profound macroeconomic restructurings that a number of the countries are doing there. And those are ongoing. But there's been some temporary factors. Big monsoon in India hit the third quarter. That tends to produce a better year next year. So we think it's going to work itself out and that we'll be back to volume growth and a strong balanced top line as we go forward into next year.
Pricing doing the work, as I mentioned, price mix of 10%, and that was better than expected. How is that happening at a time where inflation rates are coming down?
Yeah, I think you can break the global price mix down into three big buckets. There's the actual kind of ongoing rate pricing, which, as you say, has been tracking down and moderating in a kind of a directionally similar to CPI. There are still input costs going up, like wages and agricultural and packaging materials, but the price kind of underlying rate is continuing to moderate. We then have a couple of other effects. One is there's a number of very high inflation countries that have a disproportionate impact at price level, and that too is moderating, but that was about 3 points this quarter. And then we got this mix effect, which is where we are balancing affordability with premiumization opportunities. And in this quarter, the outsized performance of the developed economies relative to some of the emerging ones. So we expect to see price mix moderating over time into 2025 and coming together with a positive volume growth. So ongoing moderation, I think, is the key message.
Because I was going to ask you if you were concerned about Vice President Harris if she does get elected. She has talked about capping prices, specifically at the grocery store, has talked about greedflation and gouging. And I'm not sure what that exactly would look like. But, I mean, if you're still growing pricing double digits, I wonder if that would be a concern.
Well, when you take the U.S., our pricing was about 10%, but only half of that was actually price. Price in our North American business was growing 5% in Q3. The other 5% came from the mix of businesses. We have some vertically integrated businesses and some concentrate franchise businesses. We have some more premium businesses like Fairlife and some other that have lower revenues per case. So the mix is half of the effect in price mix in North America. And at 5%, it's not that far out of track with the trailing CPI. And so I don't think there's a big problem there. And actually, input costs continue to go up, as I said, even in the U.S. around particularly wages, agricultural commodities, and a number of the packaging materials are still rising. And we expect that to be the case going into next year.